Good morning, students. All right. A very warm welcome to everyone to Global Online Kannada. So in this session, we will be discussing very important MCQs on the important chapter of Management Paper 2, right? In the international business, the balance of payment is very important chapter. So in this session, we will be discussing short MCQs for the upcoming KSET examination. So if you are preparing for the Management Paper 2, please watch this video till the end. This will be very beneficial for you. Okay. All right. So let's start with the session fast. So first question on your screen, you can see the all questions will be on the BOP. Okay. What is BOP? What are the terms in the BOP? How to calculate it? All the questions are covered in this session. So first question is the balance of payment is the best defined as a record of income and expenditure of the government, all of the above. So when we look into the balance of payment, okay, the most important thing is to know what is balance of payment, right? So balance of payment is nothing but the systematic record of all economic transactions between the residents of the country and the rest of the world. Clear? So all the transactions will be covered in the balance of payment. Clear? Like here you can see the record of income and expenditure of the government. It is not the BOP. It is what? It is a government budget. See, government expenditure, all the expenditures throughout the year, all the income throughout the year will be calculated and the output will be called as a government budget, right? Option C is telling about the record of only trade in goods, which is called balance of trade, not balance of payment, right? And a statement of foreign exchange reserve, it is not a balance of payment, right? It is a term in that where foreign currencies, gold reserves, right? We have SDRs, we have reserves, positions, right? Those all things will be discussed, or those all things will be included in the statement of foreign exchange reserves, right? So BOP is the transactions which is recorded, right? The economic transactions between the residents of a country and the rest of the world. Clear? See here. The BOP is comprehensive record of all economic transactions like goods, services, income, transfer, and investment. These are the terms, these are the components of the BOP, which is included, which is considered in the BOP calculation, right? Between the residents of a country and the rest of the world in the given period, right? It includes both current and capital account. So basically when calculating the BOP, we need to calculate the current account and capital account. There are different terms in current account and capital account. Later we will discuss. Okay. Next. Before moving to the next question, very important thing I would like to tell you. We are also providing a complete course for the upcoming KSET examination, or if you are preparing for the UGC NET December attempt, we are providing a complete course for management students in which you will get the complete video lectures, the full syllabus video lectures, complete syllabus notes, mock test will be provided to you. So you will practice more and more MCQs and your confidence will be boosting up. PYQs with explanation. This will give you an idea about the examination pattern and what kind of questions are being asked in the examination. Doubt clearing sessions will be provided to you. Marathon sessions also provided to you. So just go and give a message on this number, WhatsApp message or WhatsApp call you can do, and join the course. Okay. Next, which of the following are components of the current account? As I said, there are multiple components of current account and capital account. So this question is on that. The components of current account. So A, B, C, D options are there. Which of the following is the component of current account, right? A, merchandise exports and imports, services, invisible, unilateral transfers, and foreign direct investment. Options are only ABC, only AB, BCD, or all of the above. All right. So right answer is option A, that is A, B, and C. Okay. Foreign direct investment is not the component of current account. It is the component of capital account, right? So in the current accounts, there are components like in goods, merchandise, services, income, unilateral transfers, right? Which is also called the current transfers. Okay, so these are the components which is considered in the BOP and in the current account, correct? So in the capital account, FDI is component. FDI is not the component of current account. Clear? So that is why we have not considered here. What is the formula of calculating the current account? First, we need to calculate all the goods, then services, then income, and then current transfers. So is equal to your current account will be there. Next, a country is said to have a BOP surplus when imports exceed exports, total capital inflows exceed outflows, forex reserves decline, and there is a deficit in the current account. Okay, so when we say that country is having the BOP surplus, so what does it mean? Okay, only B, only A and C, only B and D, or all of the above? Only B. That is, total capital inflows are exceeding the outflows, right? When our inflows are maximum, okay, than the outflows, which is called the BOP sub. Okay, that means here A, okay, that means here A and D. When imports are exceeding, that means we are purchasing more than the exporting. We are giving more money to the other countries than having money in our country, right? So when we are importing, that means we are purchasing, we are expending something, we are doing expenditures, our money is outflowing. So it is not the component which is considered in the surplus, right? So import exceed exports and there is a deficit, option D, there is a deficit in the current account. These both are indicates the deficit. Getting it? So when the outflow is maximum, that means it is deficit. That means we are importing maximum than the exporting, not a surplus. Okay. And C implies forex reserves are falling, right? Here the forex reserves are declining. The option C is saying forex reserves that needs to be maximum in the country, which is not there, which means it is declining. So it will not be considered as a surplus component. Clear? So these all A, D, and also a C option explaining, or it is sign of a stress, not a surplus. When we have surplus, it is a sign of a good thing, positive thing. Next, which of the following transactions are included in the capital account of BOP? Now we are considering capital account. FDI and FPI, ECB, foreign aid, and imports of goods. ABC, A and C, ABD, or all of the above. Okay. So basically, when we are calculating the capital account, we need A, B, C. That means we need FDI, we need FPI, we need external commercial borrowings, foreign aids, but not the imports. Import is considered in the current account, okay, not in the capital account. See, the capital account covers FDI, FPI, external borrowings, NRI deposits, and foreign aids as well. Okay, so imports of good, that is not a part of capital account, that is a part of current account. Okay, so only A, B, C is the correct answer here. Clear? Next, what does a persistent BOP deficit indicates about an economy? So first thing you need to understand that what is the persistent BOP. That means consistent deficit in the BOP. Okay, so what does it mean? A, strong foreign investment inflow. B, currency is under depreciation pressure. C, high export competitiveness. Or D, possible decline in the forex reserves. Only A and B, C, B and D, or all of the above. So correct answer is option C. That means B and D. Currency is under depreciation pressure and high export competitiveness. Okay, strong foreign investment inflow and the possible decline in the forex reserves. What is it? High export competitiveness. These two A and C is the positive one, which not indicates that is the deficit is there. Okay, the B and the D option is correct, which indicates the deficit in the country in the BOP. See, the persistent BOP deficit suggests that the demand for the foreign currency is higher. Understanding? The demand for the foreign currency is higher. Clear? And that indicates the persistent deficit, BOP deficit. Okay, leading to the depreciation of a domestic country and possibly draining forex reserves. Correct? So A and C is the incorrect. They would improve BOP, not worsen it. As I said, A and C, that means strong foreign investment inflow. That is not a deficit, that is a positive sign. And high export competitiveness, that is also a positive sign, which does not indicate the deficit of a BOP. Okay, which will actually indicates the BOP is in the positive way. Clear? When the persistent BOP deficit is there, it suggests the continuous excess of imports. Sometimes it is a depletion of foreign exchange reserves also, right? The currency, the country's currency is in the pressure, right? Sometimes potential economic instability is there. So these are the components which is considered in the persistent BOP deficit. Okay. Remember whatever the points I have discussed. Okay, these are the components you need to understand, you need to keep in your notes, right? So it will be beneficial in the examination also. Which of the following statements are true about the relationship between BOP and exchange rate? Okay, A, BOP surplus leads to appreciation of a domestic currency. B, a BOP deficit may lead to devaluation and depreciation. C, exchange rate movements can affect trade balance. And D, BOP and exchange rates are unrelated. Okay, options are on screen: A and B, C, A, B, C, or all of the above. So what is it? It is option A, B, and C. Okay, understand the question first. What question is asking? Okay, which of the following statements are true about the relationship between BOP and exchange rate? So there is a something relation between the BOP and exchange rate. Okay, and they both are closely connected, right? So when a BOP surplus, okay, that we have discussed in the previous question itself, leads to the appreciation of domestic currency. Okay, BOP deficit may lead to devaluation or depreciation, and exchange rate movements can affect trade balance. Okay, those three are connected with the relationship between the BOP and exchange rate. See here, BOP and exchange rate are closely connected. That I have said you. Surplus strengthens the domestic currency. That is correct. Okay, when we have the surplus, the BOP surplus, that means our currency is in the positive, right? So it is not the deficit component, or it is the not the thing which weakening the BOP, right? So deficit is the thing which weakens the surplus or weakens the currency. Correct. Also, a weaker currency makes export cheaper, improving trade balance, right? So when we have our currency in the weak format or weak position, our exports will be directly what we can say उस पर फर्क पड़ेगा, right? So directly export पे उसका फर्क पड़ेगा. So when we have a weaker currency, that is not a good sign, right? Improved trade balance. Correct. So basically the balance of payment and the exchange rate both are closely connected. When we have a BOP surplus, okay, our domestic currency appreciates, right? When we have a BOP deficit, our domestic currency will depreciate. Correct. And sometimes, see, when exchange rates are determined by the demand and supply, right, and demand and supply of currencies in the foreign exchange market, BOP reflects a country's trade and capital flows. Correct. For example, let's say if India imports more than the exports, that means the BOP deficit. It needs more foreign currencies, right? So increasing demand for foreign currency, that means it weakening it. That means it is weakening our currency, weakening our BOP. That is why the countries are trying to maintain the stable BOP. Why? To avoid the sharp fluctuations in the currency rate or the exchange rate. Understood? Next, which of the following are invisible item in the BOP? See, when we are calculating the BOP, that is the term which we need to consider invisible items, right? I'll explain you what is it. Uh, A. Software service exports, remittance from abroad, tourism income, machinery exports. Option A, B, C, or B, B and D, or C, only A and C, or D, all of the above. So, right, okay. Machinery exports is a visible item, which is not invisible item, correct? Under mercantile trade, invisible form a major part of India's current account income. Okay, so invisible items, that means which is service, okay, which is not the physical goods, okay, physical export and import things, which is the service which is invisible, and that need to be considered in the calculation of BOP. In India, which institution complies and publishes BOP data? Who publishes the BOP data? Ministry of Finance, RBI, SEBI, or Niti Aayog? Who is the one who publishes the Indian BOP? So that is none other than the RBI. Okay, RBI is the responsible body who publishes the BOP data. Okay, Reserve Bank of India is the sole authority responsible for compiling and publishing India's BOP data on quarterly and annual basis. Okay, so sometimes uh, Reserve Bank of India gives the data quarterly, and sometimes it gives annually. Okay, the Ministry of Finance and SEBI are involved in the policy and regulations, but not in publishing the BOP. Okay, so RBI is the responsible body who releases the data, which is quarterly also, which is annual also. Okay, the RBI provides the details about the current account also, capital account also, right, and overall BOP position of India also. Okay, so remember this point, RBI is the responsible body to publishing the BOP data. Which of the following entries would be recorded as a deficit in BOP? Okay, import of goods, foreign tourist spending in India, Indian company repaying foreign loan, and D, Indian remittance to relatives abroad. So think of it, which can be considered as a it's not a deficit, it is a debit. Sorry for that. Okay, so the components or the options which are considered as a debit in BOP. Okay, ABC, B and C, A and D, or all of the above. So it is A, B, and C only. Import of goods, that means debited. Foreign tourist spending in India, debited. Indian company repaying foreign loan, debited. Okay, only option D, A, C, and D. Sorry, not A, B, C. A, C, and D. Okay, foreign tourist spending in India, how it is called debited? It is credited, right? The income is coming, the inflow is there, it is in the country, right? Sorry for that. Okay, A, C, and D is the correct one. Debit entries represent the outflow of a foreign exchange. So we have a money, when we are spending it outside, that is the debit. Okay, such as imports, loan payments, remittance sent to abroad. Correct. So whatever which is coming inside the country, that will be credited. That is credit entries. Okay, remember this point. Debit entries, that means our foreign exchange are outflowing, and the credit, that means it is inflowing. Okay, the BOP identity states that A, current account plus capital account is equal to 0. B, BOP always balances in accounting terms. C, capital account surplus offsets current account deficit, and D, trade surplus leads to currency depreciation. Why I'm saying the fluctuation in the live? I mean, students are coming and just going again. So B and C is the correct one. Okay, BOP always balances in accounting terms, correct. Capital account surplus offsets current account deficit. Okay, so current account plus capital account is equal to 0. It is not 0. Okay, it never zero. Trade surplus leads to currency depreciation. Okay, that is also not considered. See, BOP always balances an accounting identity. Okay, obviously, due to changes in the reserves and capital flows. So we need to calculate it. We need to keep in accounts, right? So it is always shows in the accounting term. A capital account surplus can offset a current account deficit. Okay, that is also possible. When we have a maximum capital, that clears the deficits of a current account, right? A option is misleading. How? They don't always sum to 0. When we have a current account and capital account, it never 0, as I said. Okay, the sum of these both components will never be 0. And D is wrong. A trade surplus strengthens the currency. When we have trade surplus, okay, our trade is in the positive term, that will appreciate the currency. It will never depreciate the currency. Okay, so that is wrong one. So only B and C is the correct. Okay, understood everyone? So this is all about the BOP MCQs. I hope you have understood all the MCQs. If not, then please comment in the comment box. One more thing I would like to tell you, that just put a message in the comment box that like which chapter you want. On that chapter we'll have a the MCQs. Okay, we'll discuss some MCQs on that chapter. Just put a message, put a chapter name in the comment box. We'll have a discussion on it. Okay, we'll have more question on it. Whatever the subject, whatever the chapter you feel that is not a that makes you hard to understand, okay, which is hard for you, just put a message in a comment box. We'll have a MCQs on that. Okay, sure. So thank you so much everyone for attending this session. See you in the next session.